Hey everyone. So right now, someone in the US just bought a multi-million-dollar house using Bitcoin, and they kept every single coin. Not with some sketchy crypto lender, but with a normal government-backed mortgage. If you're about to click away, hear this part. This is the first real sign that Bitcoin isn't just digital gold anymore. It's starting to become part of the plumbing of the U.S. housing system. And if you care about price, supplies, and long-term upside, this changes the game. Let's break it down in a simple language and stay human about it. Imagine this. You're stacking Bitcoin for years. You finally want a house. The old way say, sell your Bitcoin, get cash, pay the down payment. That hurts, right? You lose part of your stack. You might owe taxes. And if Bitcoin moons later, guess what? You're stuck with watching from the sideline. Now, there's a new path. You can use your Bitcoins to help qualify for the house without selling it. Here's how it worked in plain terms. You still get a normal house loan like everybody else, a 15 or 30 years mortgage, one monthly payment, one basic rules. On top of that, there's a smaller loan that uses your Bitcoins as backup. That smaller loan gives you the money for your down payment. From your side, it feels simple. One house, one mortgage payment. Under the hood, your Bitcoins is moved into a safe account. You still own it, but you can't trade it or move it whilst the loan is active. When the mortgage is fully paid off, that Bitcoin comes back to you. So the buyer in this real world deal ends up with the house and keeps every single set. No selling the top. No, oh man, I sold too early. No tax bill from dumping a big chunk of your Bitcoin. That alone is a strong hope for any Bitcoiner. But the bigger story is what this says about where Bitcoin is going. For years, people who don't like Bitcoin repeats the same line. It doesn't do anything. It's just sit there. Let's talk about that like two normal people. If something helps you save your money over time, that is doing something. Gold does that. Real estate does that. Bitcoin has done that better than almost anything over the last decade. But still, for most folks, the Bitcoin place has been buy, hold, hope. Not much more than that. This new mortgage setup starts to move Bitcoins into a different lane. Now, it's not just something you hold. It's something the system itself can use. The fancy word for that is collateral. In simple terms, collateral is stuff the bank trusts enough to lend against. If you don't pay, they use that stuff to cover the loss. Rich people have used these tricks forever. They don't sell their best assets. They borrow against them. Stock portfolios, buildings, businesses, those are collateral. Now we're seeing Bitcoin step into that same role. Not in some side corner of the internet, but inside the US housing world. And this isn't happening with a random lenders. This is happening with mortgage that sits under the same umbrella as the loans regular families use. That's a huge status jump for Bitcoin. Let's talk about why this is more than just a feel-good story. Most of the hype around Bitcoin ETF was about buying. It made it easy for people, funds, and advisors to get exposure. That's brought in new demand and price reactions. But ETFs are built to be traded. If investors get scared or want profits, they can get out with a couple of clicks. When that happens, the ETF sells Bitcoin, and those coins go right back into circulation. So ETFs are great for bringing in demands, but they don't lock coins away. This new market structures hits a different level supply. When you pledge Bitcoin into one of those home loans, those coins go into a deep freeze account. They're not on exchanges. They are not sitting on a lending platforms. They are not one bad week away from being auto sold. They just sit there for life of the loan, often 15 to 30 years. Here's the key details that make this powerful. There are no price-based margin call. If you ever taken a loans against your coin on a trading form, you know the fear. Price drop fast. Your collateral ratio get hit, and suddenly your coins get liquidated. This home loan setup doesn't do that. As long as you keep up with your monthly mortgage payment, your loans doesn't change just because Bitcoin had an ugly week. So even once the charts is bleeding red. Those pledged coins stay locked in. They are not dumping into the markets because of volatility. That's a quiet but massive shift. Now, let's put some simple big picture context around this. Bitcoin is capped at 21 million coins. Some of those are lost forever. Some are sitting with long-term holders, companies, and even governments that barely move them. That means the pile of Bitcoins that actually trade days to days is already much smaller than 21 million. Now, imagine over time, more and more of that tradable piles get used in mortgages. Every time someone uses this kind of loan, a chunk of Bitcoin gets moved into long-term storage for up to decades. Less liquid supply, same or growing demand. That's the kinds of setup long-term Bitcoiner dreams about. At the same time, think about the size of the pool Bitcoin is stepping into. The U.S. housing market is worth tens of trillions of dollars. The mortgage layer on top of that is also in the trillions. It's one of the biggest and slowest part of the financial world. Up to now, Bitcoin was mostly compared to gold. People call it digital gold, a better store of values and so on. Gold is big, but most of it just sit in vaults. It doesn't really drive the everyday credit system. This move starts to shift the comparisons. If Bitcoin becomes a normal, repeatable piece of mortgage collateral, it's not just trying to replace gold in vaults. It's joining housings and other major assets into the core of the credit systems. That's a much bigger stage. There's also a very human side to this. Not long ago, telling a lender, I own a lot of Bitcoin, could hurt you. They didn't trust it. They might ignore it when counting your wealth. In some cases, it made you look riskier. Now, at least in this new setup, that same Bitcoin is being treated as part of the solutions. It helps you qualify. It helps you move from prices out of housings to I can't actually buy. And the first wave of people using this is not just old folks with paid off houses. It's younger people in the 20s and 30s who grew up with Bitcoins and finally have a ways to use it without giving it up. That's a huge psychological flip from this is a red flag to this is real wealth we can work with. So when you see the chart droppings and everybody yelling that Bitcoin is dead, remember this. On the surface, one, the price looks ugly. Underneath, the foundation is getting stronger because the system is slowly rewiring Bitcoins into places it has never been before. And this time, it's not about a new meme coins or some forms on a random chain. It's about regular family products, a home loan, quietly upgrading to accept Bitcoin as part of its core design. That's the kind of changes. That's the kind of change most people miss in real time. But it's exactly the kinds of change that matter most a few years down the road.